Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top market events that are expected to be pushing prices for the day. So some of the key highlights include this morning's UK GDP data. We'll also be looking at the afternoon data from the US, which will be the producer price index. In addition, these will be comparing with the consumer price index data that came in yesterday in the afternoon. Then we go through an overview of the geopolitical tensions that are currently happening in the Middle East, and of course, a view on the sanctions and progress in negotiations between US President Trump and other presidents around the world. So once we cover these, we'll also be doing some technical analysis, trying to understand what are the key chart patterns where prices might be headed next. And once we understand that, hopefully everyone will trade from an informed perspective. So as usual, this session does not does not constitute any form of investment advice. It is not a recommendation to trade, so you should always do your own due diligence and of course practice proper risk management. So we'll be starting with the economic calendar. I can see a lot of you have already joined. Hello, Paul Kerry. Good morning, and shout out for being the first person to join and comment. You can see Robert Kavala in the house, Lucy K, Naomi Wamboi, Ken Moneki, Pal. Thank you guys for joining. If in case you have any questions, feel free to type them in the comment section, and I'll be responding as we progress with the session and towards the end. So, as of this morning, we had GDP data coming in from the UK, and as you can see, the data was quite surprising. In the previous reading, there was a 0.2% growth. That is in the month of April, but then in the month of May, we expected quite a slowdown of negative 0.1%. But the actual report showed negative 0.3%. So this was quite disappointing, seeing the UK economy going into contraction. Also knowing very well that they have problems with their fiscal budget, and this is mounting problems on the UK economy. And of course, this led to a weakening of the FTSE 100 index or the benchmark index for the UK stock market. Also, the pound is not doing really well. It's also weakening against the dollar, among other currencies. So going forward for the rest of the day, we'll be looking at the producer price index. So for those who are new to PPI, it basically measures the change in the price of finished goods and services sold by producers. So we know that when producers produce goods, they sell these to distributors or wholesalers, and then these wholesalers will sell finally to retailers who eventually sell to the end user. So when you look at the consumer price index, we are looking at the goods and services sold to the end user. But then when you track this other side of the producer price index, you're looking at the wholesaler prices. And this basically gives you an idea of what might be charged in the near future. So producer price index are a forward measure of what might happen in the consumer price index in the near future. So it's a front run of the consumer price index, and it's usually very indicative of where the CPI might be headed next. So this data point is released monthly, about 13 days after the month ends. Today being the 12th of June, this is when we are getting the report for the month of May. So in this case, the previous reading was negative 0.5%, meaning that prices contracted by 0.5%. But then for the last month, we're expecting an increase. In this case, we're expecting that producer prices increased by 0.2%. So the interpretation is usually the same as CPI. So if you are following CPI data yesterday, we know that we were expecting 2.5% US inflation. Instead, we got lower than expected, 2.4%, a slight uptick from the previous reading of 2.3%. But then the overall outcome in the market was the expectation that the Fed will consider cutting rates. And as a result, we saw the dollar weakening. So in this case, if we see a much lower than expected producer price index, then the same expectation is expected in the market. The dollar continues weakening with a much weaker PPI. And of course, if it's stronger than expected, then we see the dollar doing the opposite, in this case, strengthening. So a much better measure can be checked on the tradingeconomics.com calendar. So here we'll be looking at the annual data, so PPI year over year for the US. So in the previous reading, we had 2.4%. So this time we're expecting a consensus estimate of 2.6%. So if we happen to see a much smaller number, that is producer price index prices going down, then that of course should be weakening for the dollar. A higher number should be strengthening for the dollar. So there's also the core PPI year over year. We're expecting largely the same measure of 3.1%, which was reported in the prior month of May. So we also be expecting a similar number in the consensus estimates of 3.1%. So as usual, if we get a much weaker number, weaker for the dollar. If it's a strong number, then strong for the dollar. So outside of that, I don't think we have any other major leading news in the market. So we now look at other assets that are currently moving and what is moving these assets. So on the currency side, we'll start with the performances. You can see that there has been quite a performance since the day started, with the Swiss franc and Japanese yen and the euro making the biggest gains against the dollar this morning, whereas the New Zealand dollar and the Australian dollar have been weakest since the day started. So clearly, a good winner could be looking at strong currencies such as the Japanese yen or the Swiss franc and pair it with a weaker currency. So on the week, that is since the week started, the euro has been the strongest, gaining 1.25% against the dollar. The Swiss franc is up 0.87%, the Japanese yen 0.69% against the dollar. So clearly, those currencies have been pretty strong, and the Australian dollar still on the weakest side at negative 0.01% against the dollar. So clearly, the dollar has been weak, but the Australian dollar has also been weaker. So now looking at other major highlights for this week, we know that there was an update yesterday that was on Wednesday, and this was regarding the key trade deal between China and US. So Trump announced that our trade deal with China is done, subject to final approval with President Xi Jinping and himself. They agreed that full magnets and any necessary rare earths will be supplied upfront by China. So in this case, we know that China controls over 90% of rare earth metals and its supply chains. And having blocked access to US markets, this was a straining business. And now the proposed agreement is expected to open up the rare earth metal and magnets business to the US. So likewise, the US agreed to provide China what was agreed to, including Chinese students' access to US colleges and universities, which has always been good with me. This is directly quoting US President Trump. So we are getting a total of 55% tariffs, and China is getting 10%. Relationship is excellent. Thank you for your attention to this matter. So that was the update on Truth Social. And of course, traders and analysts have been trying to go through the deal and trying to understand what are the finer details of the deal and how various markets will be affected by this. So here we can see a closer look on the deal. Trying to open this up. So don't know if it goes deeper than this. So so far, I don't think they have shared any more details. So we'll be expecting to see more details today. So from all the articles that I've been checking this morning, I haven't seen anything that goes deeper into the deal that was proposed between Trump and Chinese President Xi Jinping. So another key announcement that happened last night, Trump tariffs live updates. Trump says he'll set unilateral tariff rates within weeks. So in this case, we know that he applied tariffs across so many other countries around the world. So now he's looking to make all of them unilateral. So he told reporters on Wednesday that he would send letters to trading partners in the next week or two setting unilateral tariff rates. At a certain point, we are just going to send letters out, and I think you understand that, saying that this is the deal, you can take it or leave it, the president said at the Kennedy Center in Washington. So after introducing steep new tariffs at oil markets, Trump instituted a pause on his most punishing duties that expires on July 9. So his latest comment, however, only muddies the waters about what could happen next as the deadline approaches. So early on Wednesday, Treasury Secretary Scott Bessent told Congress that it is highly likely that the tariff pause would be extended for countries that are negotiating with the administration in good faith. There are 18 important trading partners. We are working toward deals on those, and it is highly likely that those countries that are negotiating in good faith will roll the date forward, Bessent said during his testimony during the House Ways and Means Committee. So on Tuesday, the US and China agreed to a framework and implementation plan to ease tariff and trade tensions. Trump signaled his approval, saying the deal was done pending sign-off from him and the Chinese President Xi Jinping. So clearly, yes, we would be seeing the US imposing a total of 55% tariffs on Chinese goods and China implementing 10% tariffs on US goods. But then that hasn't been signed yet, so there's still more room for negotiations. So US effective tariff rate receipts on trade, truce with China, and in this case, we are looking at a trade tariff that was at 2.49%, jumped all the way up to 17.8%. So we'll be seeing how this changes with the current proposed deal between US and China. So outside of that, gold advances on Middle East tensions and Trump's tariff pledge. So last night there was a very heavy tensions, especially in the Middle East, with Iran basically blocking some waves across Iraq, the neighboring country Iraq. And there was a lot of worry that Israel would either strike Iran or Iran would strike Israel. As these tensions kept on rising, a lot of investors went for safe haven assets. So we had a very strong rally in oil prices as well as a very strong rally in gold. So if you're watching the markets last night, then you probably noticed the same. So gold gained for a second day on increased tensions in the Middle East, with its haven status also supported by President Donald Trump's comments that he will inform trading partners on tariff rates within 2 weeks. So bullion rose as much as 0.6% to $3,373 per ounce, extending a 1% gain from an earlier session when it was also boosted by a declining dollar. Buying interest increased after the US ordered some embassy staff to depart Baghdad and allowed military families to leave the Middle East after Iran threatened to attack US bases if talks over its nuclear program fell through. Separately, Trump said he intended to send letters to trading partners in the next 1 or 2 weeks, setting unilateral tariff rates ahead of July 9 deadline to reimpose higher duties on dozens of economies. The president also said a trade framework with China has also been completed, with levies between the two largest economies to be maintained at their current levels. So uncertainties over global trade tensions and heightened geopolitical risks have rattled markets this year, boosting gold's allure as a store of value in turbulent times and powering an year-to-date advance of 28%. The precious metal, which reached an all-time high in April, has also been supported by increased central bank buying. So spot gold was up 0.3% to 3364.43 as of 7:59 a.m. Singapore time. The Bloomberg Dollar Spot Index was steady after falling 0.4% on Wednesday. Silver, platinum, and palladium also gained on the same news. So we know that silver is hitting a new, I would say, 13-year high. This happened on Monday. So silver prices climbed above $36 per ounce on Monday, hovering at their highest levels in over 13 years. As safe haven demand remains strong amid global economic and trade uncertainties. So the metal also gained support from gold's recent underperformance, which prompted investors to shift towards alternative precious metals. Caution prevailed in markets ahead of renewed US-China trade negotiations in London, with sentiment dampened by underwhelming Chinese export data. In May, China's exports missed expectations, weighed down by a sharp decline in shipments to the US, underscoring persistent trade tensions. Beyond its role as a hedge, silver also benefited from robust industrial demand, particularly in solar energy applications. According to the Silver Institute, global silver supply was 15% below demand in 2024, and another deficit is projected for this year, further supporting prices. So clearly, since 2018, we have had a global silver shortage, and that has been driving prices higher. We should be watching the supply versus demand curves for silver in the near future with the expectation that this bullish momentum could extend further. So outside of that, top news this morning is UK GDP contracts more than expected. We have seen negative 0.3%. European stocks lower on renewed trade concerns. In this case, concerns about tariff negotiations between Trump and the EU. US PPI seen rebounding in May. US producer prices are expected to rise by 0.2% month-over-month in May 2025, rebounding from a 0.5% decline in April, which was the sharpest drop since April 2020. So UK trade gap, largest in near 3 years. So in this case, we're looking about the trade deficit, which widened sharply to 7.03 billion in April, up from 3.7 billion in March. So dollar weekends on Trump's tariff pledge. The dollar weekend below 98.5 on Thursday, approaching its lowest level since 2022, following renewed tariff threats from Donald Trump. So gold gains on rising US-Iran tensions, Trump's tariff pledge. So here we saw that 370 per ounce on Thursday. This was earlier this morning as escalating US-Iran tensions and fresh trade policy signals from President Donald Trump boosted the safe haven. So Brent eases off 2-month highs. Brent crude oil futures fell to around 69 per barrel on Thursday after hitting an over 2-month recession on fears of supply disruptions amid rising tensions between the US and Iran. So those are the key highlights in the markets as of this morning. And now we can jump into some technical analysis and try to understand where the markets might be headed next. Can see Computer Hub 001. Thank you for joining the session and reposting the stream. Naomi Joki, thank you for joining. All Sports TV in the house. Thank you guys for joining. 137 on X. Good morning and thank you for joining. So let's progress and now jump into some technical analysis. Try to understand where the opportunities might be lying for the day. So I'm hoping you can all see my screen or visualize it and to make it as big as I can. Yeah. So this is silver. It had hit quite a good high here. Notice after some consolidation here, there was a breakout last week, which led to a very strong rally. The rally extended through to this week, but then since Monday's high, all we have been seeing is prices moving further back downwards. With 36.86 being the highest price we achieved, which was a 13-year high. So since then, we have seen prices moving further back downwards. So the tensions that were mounting last night, with the expectation that there would be escalation between Iran and Israel, this led to sustained momentum that prices would keep moving higher. So you can see that throughout midnight and early Sydney session, the white metal was basically gaining. But then this morning, after people realized that this is not escalating, there was a big sell-off from the premium, and all we have been seeing here is these metals erasing some of the gains they had made earlier in the day. So here we are seeing silver making a very strong bounce. So the pullback is only temporary. The cause for the strong rally is the shortage of silver and the strong demand, especially from solar panels. So in this case, it's a good bounce, and we could be seeing the market retesting the high of day. So good chance that we see silver retesting that 6.44 price action level. So looking at the other shiny metal, in this case gold, we had seen a very strong momentum, especially yesterday in the evening, leading to the Sydney session. So a very strong rally that got us to at least 33.70 77. But then this morning there was a strong pullback, and this was at the London Open. But then we are seeing a strong bounce, which implies that the market could be headed right back to the high of day unless something changes across board. So on the forward chart, this is how it looks like. So it's still quite a noisy chart. But then we all know that we were seeing gold prices pulling back downwards. So this was more of a prevailing pattern. The highs are also getting lower, and now what we are seeing here is a market that broke towards the upper side last week, retested towards the end of the week on Friday, and then bounced strongly. So from the 1 hour time frame, this is what we got. So the high of last week was here. The low of last week was here. This is the low of this week, Monday. So Tuesday, Wednesday, and now Thursday, it seems like we are getting more pressure to push prices on the upside. So from the 15 minutes chart, if the market was going for some form of liquidity around here, then it seems like we already got that, and we are looking at a very strong bounce and the market regaining some of the lost value. So good chance that we see the market retesting the previous high. So 33.77, that 378 could be a nice target. So on the equities side, we have seen very strong drop this morning. So we have seen it happening with the Dow, the SP 500, and the Nasdaq. So clearly, it's a market that was largely moving sideways. Nothing much was happening here. But now what we are seeing here is momentum on the 1 hour chart, indicating a potential breakout and acceleration towards the lower side. So perhaps retesting these levels around 42,311 for the Dow. So good chance that we see the market raising some gains, especially if we continue seeing tensions, especially renewed concerns about tariffs. So for the Nasdaq, it's the same thing. We have been seeing this market making a very strong recovery. So from the daily time frame, make no mistake, it's almost 100% recovery. We almost got into a new all-time high. But then judging from yesterday's price action and then today, we are seeing more of a sell-off in this market. So clearly, if you are to look at the last couple of days, I would say better part of this week, and also looking at last week, if you save these attempted break towards the lower side, which did not materialize, then a majority of the price action was here. A majority of the price action for these last couple of days was bullish following this path, and now we are looking at a potential break, which would likely mean that we head all the way back down to 21,440. So that hasn't been confirmed yet, so it's a wait and see kind of scenario. So SP 500 also doing the same thing, attempted to bounce here early in the morning, failed, and now it's back downwards. So now you look at the H1 chart, all these sustained momentum and attempts to move even higher has now potentially failed, and now we are looking at the market moving back downwards. So in this case, if you look at the base of the pattern here, the attempted or the failed breakout towards the lower side, so good chance that we see the SP 500 retesting this area here. So on other equities, the UK 100 index managed to get out of this consolidation, broke towards the upper side. So now we are looking at a market that is really struggling to find momentum. So on the forward time frame, you can see it's really slow to get into a new all-time high, but then the new all-time high is not very far off. So if you go to a small time frame, the 4 hour and then the 1 hour time frame, then you'll notice that there's a prevailing pattern here. This morning we have just seen a bounce, but then if you look at the last 2 days, it's a complete failure to form a new high. So this market hasn't been able to form higher highs. So good chance that it might continue struggling within the same. So if you observe the last 2 weeks, this has been the prevailing pattern, but then last 2 days unable to form a new high. So potentially we should be observing for signs of a break towards the lower side. So that hasn't played out yet. So we remain watchful. So Nikkei 225 index, that is for Japan, made a very strong rally last week, got to the previous high, attempted to form a new high. So the new high was not very far off from the previous high. It was the same exact high. But then immediately after getting to that high, there was a big sell-off. And of course, if you look at the daily candlestick, this was more of a shooting star, and then today a complete reversal. So good chance that we see the Nikkei weakening a bit further. In this case, the point of the breakout was already around 723. So good chance that we see these extending all the way back down to this area where we had some good momentum building from here. So on other European equity indices, we know that it's only one of them that is making some good progress. I believe this should be Norway. Yeah, Norway was the one that was more resilient. So this morning, you'll notice as the market opened, there was a gap up. So the market closed the gap immediately, and it is now proceeding a bit lower. So while this was one of the best performing indices this morning, hitting yet a new all-time high, other indices had a completely different pattern. So for the Euro Stoxx 550 index, there was a very strong sell-off right from the market open. And now we are looking at the index potentially retesting a key level support area here. So good chance that we see an extension of the bearish momentum. So that's the Euro Stoxx potentially going to 5,300. Then for the Netherlands, since the stock market opened, there has been more of a strong bearish momentum. So clearly back into a familiar pattern where the market was moving sideways for like 3 weeks, I would say 4 weeks, before breaking towards the upper side. And now with the familiar pattern back in play, good chance that we see the market going for the support area of the same pattern. That is 919.6. So for the Swiss stock market index, also did the same, strong bearish momentum since the market opened. So good chance that we see the market retesting our familiar support area here. So the familiar support area is along the last couple of weeks, so I'd say 3, 4, 5 weeks. So from the H1 time frame, it's not very far off. So we are looking at the market retesting this area here, and the exact price action area is around 12,186. So French stock market index is currently getting some good support after a big sell-off earlier in the morning. So from the forward time frame, you notice the same thing. We've had our key level support being along these lows here for the last couple of weeks. So a line of best fit would show us that this is a key level support. So good chance that we see the market bouncing from here, but also notice there's still more room for downside. So for the Spanish IBEX, here a big sell-off that broke the previous support. We are way past the wicks. These are the wicks we had seen in the previous candles, which basically implies that there is more room for downside, and now we might be headed for a key level support around 13,931 and below. So this would be an interesting play for the day. And of course, for the German stock market index, one of the strongest markets that we have been experiencing in recent history. It has broken a key level support, and now it's going for yet another one. So I would be going for this area here, 23,587, and with further momentum, this other area here, 23,483. So good chance that we see the market retesting these two areas here. So strong sell-off in equities across board. And now looking at currency side, we'll see the key level differences. So starting with the dollar index, you can see it has been pretty weak since yesterday. So with a very weak dollar index, then we happen to see other currencies gaining. So with the dollar index at 98.26, we could be seeing the dollar index going into a new low, perhaps into levels of below 98, maybe 97. And with that in mind, we have seen currencies taking advantage of that. So while the dollar is weak and currencies are supposed to be gaining against the dollar, the pound was also pretty strong early this morning. But then after a very weak GDP, which was negative 0.3%, we saw the pound losing to the dollar, even if the dollar is that weak. So this basically gives us an idea of how weak the pound is. So if you look at other pound pairs, we will be checking that later. We'll notice how it has been weakening to other currencies. But then if you look at the euro, it's a very strong rally. We mentioned that if it breaks above 1.145, then the target is 1.156. So we are well on course with that trajectory. So good chance we see this bullish momentum extending to 1.156. So as for the Swiss franc, we have seen the dollar really weakening against the Swiss franc. So we expected that the dollar would find out of resistance breaking this area here. So eventually it broke towards the lower side. We have broken a key level support. So this was the previous lowest price for the last couple of weeks. And now from the forward time frame, it basically shows that we are on course to 0.811. So now looking at Australian dollar, we know that it has a very strong correlation with gold. So as the price of gold weekends, also the Australian dollar weekends. So here, the Australian dollar was really weakening to the dollar. So we have seen it has been one of the weakest currencies over the week. But then so far, we are seeing some good bouncing here. So good chance that the Australian dollar make some recovery for the day. With the weak dollar, perhaps even getting to the Asian session high. So here, after a strong sell-off early this morning, we could be seeing the market making some recovery for the day on the back of a weak dollar. So the yen here, we expected a sharp drop to this area here. That was on Monday. That didn't play fully, only played halfway. Then Tuesday, Wednesday moving higher, but then today being Thursday, we are seeing the yen regaining strength again, and now prices moving further back as we had expected. In this case, a key level of 143.5 being our target here, as we look at the yen regaining some momentum against the US dollar. So for the New Zealand dollar, also a currency that is really struggling to gain against the dollar. So here we are looking at a very noisy chart, and notice this is the 1 hour time frame. So no matter how confident we are in the current prevailing trend line, it shows a market that is really struggling. Notice how in this market, even if I draw the trend line as accurate as I can, trying to find a line of best fit, this level has been acting as supply consistently. Here, an attempt to break towards the lower side is met with a strong bullish momentum. So here, it's not like the market is just breaking and moving further downwards. So it's more of an interplay where the market is looking at very short-term levels, like the weekly low or the most recent low, bouncing off from it, moving higher. So even interplaying with individual sessions. So that's why you can see these kind of support areas here. And then if you look at the resistance areas and the swings that have been playing out, then you know that it's more like the market will be making a very short-term move to the upside, perhaps get to the London high and then get back downwards. So as I already mentioned, we'll be looking at more pound pairs. So I'm trying to see which one we have here. So the pound being pretty weak this morning, also lost to the Canadian dollar. So here, notice what we had. Sorry for that. Trying to find a line of best fit. So we had a key level resistance. So the pound had gained early in the morning, only to lose to the Canadian dollar later in the day after announcing a weaker than expected GDP. But we can already see that the market seems to be finding some key level support. So if these are range for the day, that's being the high and these being the low, chances are that the pound will still be weak and might eventually push lower. So good chance that we see this bounce extending a bit higher, but then eventually the pound ending up on the lower side. So still looking at one more pound pair. So one of the strongest currencies for the day is the Swiss franc. So here we can see that the pound just fell outright against the Swiss franc. So in this case, it's a market that was really struggling to recover. Notice the attempts to push beyond this area here. So for several weeks, we can say that this market was trapped within here. So this is what 4, and this is the 5th week. But then we can already see pressure and attempts to break and trade below. So we should be observing these to see signs of a potential break. So on the 4-hour time frame, it will be much clearer, perhaps in the next 4 hours, to see if there's a clean break towards the lower side, which would determine a direction for the pound trading against the Swiss franc. So as always, remember that these sessions happen every day, Monday to Friday at exactly 11 a.m. They are all free of charge. So make sure to join and invite your friends. If you enjoy the session, like and retweet. If you are on YouTube, make sure to share the link with your friends, like and subscribe to the channel so that you can get an update whenever we have a new stream coming up. So remember, we have the latest episode of the Bullish Banter app and running on the FX Pesa YouTube page, as well as all other podcast platforms. So make sure to check it out. If you don't have a trading account, check the links in the description below. If you're watching this on X, visit FX Pesa Official, and then you'll get a link to register for an account. And if you're looking to learn how to trade, make sure to check the Novice to Pro series, which is available on FX Pesa YouTube platform. Then from there, you'll be able to learn how to trade. So checking on the comment section. So this one is on US30 gaining with CPI news. This CPI news came yesterday, and it was almost at the same time when US President Donald Trump announced that he had agreed a trade deal with China. So by saying that there is a done deal, there was more positive optimism in the market. So that's why we saw a big jump. But it was more of a whipsaw because we had this big jump. Then eventually the market erased some of these gains as the deal was not very much believable, didn't have the best of terms that investors were expecting. So the CPI was more overcrowded by the news of a trade deal with China. So I believe I've answered all the questions. I can't see any other questions that I may have omitted. Hello, Marwa JT, Charles Palmer. Thank you guys for joining. I hope to see you guys on the next session. Enjoy your day.